Good day, everyone. My name is Anthony Phillips Njoku, and I'm a certified professional digital trader with 13 years of experience, currently managing funds for the company Tenet Digital Asset Limited and for different private investors. So this is currently what we call the market technical and fundamental breakdown for the time period of June 19th to June 23rd. So yeah, we'll be telling you about the current structure of the market, what we expect the market to do, and we're also going to go through the news that is going to bring this high impact and high movements for the market. So this is for DXY. DXY signifies the strength of the dollar. And if you can look closely, the trend is your friend. DXY, as at last week, we were expecting DXY to have some strong momentum over here and continue pushing up, but no, it decided to create an expanding flat here and then push down, corrective structure, push down, corrective structure, push down. So we're expecting another corrective structure and then another push down to this psychological level of 101.500. That's what we see for DXY. So dollar is going to be weak this week we're going into. Then with that said, the next is Euro USD. Euro USD is highly correlated with DXY, which means if DXY is going down, Euro USD is going up. If DXY is going up, Euro USD is going down. So the same fact plays out in Euro USD. Over here, this was the NFP news that pushed the market to the downside. We expected as the week opens up from here, we'll continue pushing to the downside, but no, the market reversed and pushed up and created this trend line, and then was just creating what impulse, swing high, swing low, higher, higher low, higher low, higher high. We need to form under higher low before the next higher high at the psychological level of 1.105. That's where we expect euro to go to. But I can see this tough resistance at this psychological level of 1.10. But as the market opens up, this momentum could still continue pushing to the upside into this 1.10 before we can now see the next drop. But whatever plays out, we'll be watching out and we'll follow the market based on the reactions it gives us. Then the next on our list is the Australian dollar against the United States dollar. The Australian dollar against the United States dollar. So for the Australian dollar, we can see closely that the market already came into this high resistance point, and we have a H4 validation point. This line you're seeing here, this green line is the H4 validation point, which is the close of the last green candle here before the markets dropped rapidly. And then this red line box you see here is the body of that candle. So currently the market has gone into that zone, which is a high resistance zone. And also we have a psychological level there at 0.69. This psychological level are levels that people like institutions look at, banks look at, and also few retail traders look at. That's why we mark out the psychological level. It's psychological. People can just say, okay, I expect that when market gets to 0.69, I will start selling off this because I've made a lot of money from it. It's psychological. So, but what really drives the market is demand and supply. So currently, based on this supply level, which we have seen previously in the past, or using past information to be able to predict this, but also you can see that we have a psychological level there that can also help us out. So from here, we're expecting what a corrective structure. We have this demand level that has not been fulfilled. There is a lot of demand within this level that has not been filled. So when the market comes back into the demand level, then we can now start expecting the next reaction on Australian dollar against the New Zealand dollar. Sorry, Australian dollar against the United States dollar. Then the next is the Great Britain pound against the United States dollar. The Great Britain pound against the United States dollar. I know that everyone should be happy because of the GDP in Great Britain is good. The GDP in Britain is good. What made it good? What made the GDP in Britain to be good is because of the movie industry, the cinemas in Great Britain. They have had a lot of demand over the past few months from 2022 to 2023, and it helped to grow the GDP. Foreign investors, foreign movie purchases, foreign producers, and so on and so forth, coming into the Britain, investing, putting in foreign currencies like dollar and euro into the economy and building the London economy. So that was known, and that gave the Britain a lot of strength as a last week to push up, have a little corrective structure, and that push up, a little corrective structure, and that push up, a little corrective structure, and that push up. So now we're expecting what? There's demand lying here. Expecting Britain to come back into here, few years. This is going to be like the bottom weekly week. And then from here, we can now start expecting more up push. You can trade the corrective structure, or you can trade the next wave, which is the up push. We have a psychological level, and also an area of resistance that needs to go and fulfill efficiency over here, which is at the point of 1.30, 1.305 psychological level. Then the next on our list is the New Zealand dollar against the United States dollar, just similar to the Australian dollar. We expect the New Zealand dollar against the United States dollar to come down into the demand level. There's a demand level that needs to fulfill some points, and there from here we're moving up into this H4 validation point, and also an area of concentration as well, before we can now start expecting next reactions in the market. Then the next on our list is the United States dollar against the Canadian dollar. Okay, based on the United States dollar against Canadian dollar, we can expect more down push into this zone. There is a H4 validation point. If you check the past, there is a H4 candle there that acted as a very massive, strong support. And then this is also the area of concentration. This green box over here is the body of that candle in the past that formed a very massive support. Why this green line here is the closing of that last red candle before the massive up push, which is like the support level. So when the market comes into here and fulfills efficiency inside there, giving us our valid entries, we're taking the trade for a corrective structure up into this return to origin at this higher point, and a psychological level of 1.335 for the United States against the Canadian dollar. And then we can, from here, we can now start expecting more downward push. But for the United States against Canadian dollar, I can see that there could be some more touches inside here. And then before this corrective structures, there could be some more structures created in here before more up push. So that's what I see for the USD against the Canadian dollar. The next on the list is the AUD against the CHF. Okay, the same structure I see on the Canadian dollar, that USD against Canadian dollar, that's the same structure I see on the USD against the Swiss franc. Over here, we have a massive area of support that needs to be turned into resistance on the daily candle, and from here we can now start expecting more downward push in the market. That is for the United States against the Swiss franc. Then the next on our list is gold. For gold, you can see that gold is currently stuck inside an area of indecision, an area of accumulation, sideways trend. So over here, we had a little fake breakout and it came back into this zone. So this support still stands and this resistance still stands. So currently, based on the structure, the way the market closed, there's demand there. The market is able to push down into this demand level. We can be expecting more push to the upside. But overall, institutions are selling gold. So if gold breaks below this demand level again, I was not expecting more downward push after it tests here as support and resistance, and then push more down. That was what I expected when it came. It broke down over here, but this was a fake breakout. And what really constituted this was that the United States dollar was actually weak that day on Thursday, which made gold to spike more up. So from here now, we'll be setting more corrective structure to the downside before more upward move on gold into this resistance level. The next on our list is the US oil. So for the US oil, last week we said that US oil is going to sell off as soon as the market opens, and then what happened? The market sold off because of we had a very massive expanding flat. So from here now, I can see that we're heading into this H4 validation point, and you can see that the body of this last green candle before the market sold off massively. When the market goes back into this zone, I now expect what somewhat structured sales setups for the US oil to continue selling to the downside. A level that needs to be filled that has not been filled is this 63 psychological level based on the reports received at February by Russia. And this price needs to fill this level. So it's fundamental, but we just need to keep following the market technically based on weekly actions. So why for Bitcoin? I can remember I told you guys last week that when Bitcoin was at this point, that was on Sunday, yeah, we were expecting Bitcoin to come down to 25,000. As soon as Bitcoin comes down to 25,000, we're going to be buying. What do you see here? At the psychological level of 25,000, Bitcoin came down here after the FOMC meeting, and interest rate was decided. Then Bitcoin sold because that was negative news for positive news for dollar. It gave dollar a lot of volatility, and then it pushed the Bitcoin down into this point. And then I told you guys buy. That morning, I told you guys buy. I was awake at 3 a.m. Bitcoin got to 25,000. I sent the signal buy. I buy. I sent it, and then as soon as the next day came, Bitcoin started buying. So my next area and next target where I sent you guys was about, I think, 33,000 or 30. But most of my trades, which has been winners, back to back, 1, 2, 3, 4, 5. 5 weeks in a row has been 1:2. So that's why I decided to just put it 1:2. So I will not come and break my winning stake. So I decided to select 1:2. I'm just taking it out at 27,000. But you guys can let it run. You guys can let it run to 33,000. So thank you. This is all for the chat. Now we're going to go into the fundamentals that is going to drive the market for the week. That's going to bring the liquidity. That's going to bring the pumps we need in the market. So on Tuesday, we can see we have a RBA meeting minutes. This is the Reserve Bank of Australia meeting minutes. This is high impact news, but it's not that important. The most important news you should be looking out for is the CPI, which has to do with consumer price index and also has to do with inflation in the economy. The next news you should look out for when it comes to the calendar is what? Interest rate, because when interest rate is increased, it is expected to stimulate inflation and reduce inflation. When inflation increases, the only way the current ECBs, central banks, they control this is by increasing interest rate. So something else you can also look out for is building permits in the United States of America. And another important information is employment. So when you come to the economic calendar, most times people are very, very confused at the data to look out for which information is more accurate. The most accurate ones are this inflation rate. You can see a GBP. On Wednesday, we have inflation rate year over year for the Great Britain pound. And that's a very high impact news on Wednesday at 7 a.m. West African time. This could be the push needed on GBP to push more up, because I see GBP pushing more up. It has like a lot of volume and momentum with it. So the next is CAD, the retail sales exports of automotors. Then retail sales most times doesn't come with high volatility, you understand? But we're going to respect it because it's going to keep Canadian dollar strong for Wednesday, 1:30. Then by 3, we have Fred Chair Powell testimony about the economy so far. He's going to be talking a lot about the interest rates, why they chose the interest rate. He's going to be talking about the inflation, why they didn't increase rates this month, why they just left rate unchanged, and the implications, the projections, and how they see the United States economy turning out soon. That's just what this is all about. Do you understand? So we need to watch out for this, because when such information is given out, other economies like Europe, I've experienced it before, will give out a very positive news for Europe, and Europe could start buying or selling as at that time. You understand? This is based on experience I've had. So the next is Bank of England interest rate decision. This is a very, very important news on Thursday. So we have very important news on GBP on Wednesday. If you cannot catch this news on Wednesday, you can catch this news on Thursday. This is by 12. This 12 p.m. 12 p.m. Yeah, this 12 p.m. Bank of England interest rate decision. Then these jobless claims, continuous jobless claims, initial jobless claims. The increase of this is very bad for the dollar, but a decrease of it is very good for the dollar. Interest rate, the increase of interest rate is strong for the economy. A reduce of interest rate is not good at all, because when interest rate is reduced, it is presumed that inflation is going to increase. But when interest rate is unchanged, it could still bring some volatility into that currency, like the Great Britain pound. Then the next is the AUD, the Judo Bank Service PMI, the Judo Bank Services PMI. So for the Judo Bank Services PMI, we have AUD on Friday. That is not really a very, very, very important news, but it's seen as a high impact news. But something else you can look out for is Bank of Judo Bank Manufacturing PMI, Producers Manufacturing Index. So it's more about the outcome of services and the manufacturing industry in the Australian zone. Then the next is GBP early that morning as well. We have the consumer confidence, which has to do with what the consumers think about the economy. Is it optimistic or pessimistic? Do they see a positive outcome for the economy? Do they see a negative outcome for the economy? That's what this consumer confidence is all about. Every country has it. Every country has it, and most times it's going to encourage individuals in this economy. Should I put in more money into this business? Should I buy more? Should I restrict investing, and so on and so forth? So the next is inflation rate year over year for the Japanese yen as early as 12:30 a.m. West African time. This is a very, very important news. Inflation rate. Like I told you guys before we check this out, 3 news you need to watch out for: inflation rate, CPI, which is CPI inflation rate, then employment rate, inflation rate, interest rates, and then employment rate. That's the 3 most important news you watch out for. Every other news supplements just pushing the market to a particular direction, or just holding the market backwards. But it could be a surprise news, you understand? So the next is in the morning, we have 7 a.m. the retail sales month over month. It has to do with the total amount of retail sales done within the Great Britain pound, which is London. The amount of sales done, sold products, non-sold products, that's it, total accumulated within the month of May. So the next is Euro HCOB service PMI. HCOB service PMI. This is new, but this is something that has to do with, let's check it out. HCOB. Okay, this is HCOB. A higher than expected figure should be seen as positive for the euro, while a lower than expected figure should be seen as negative. Okay, so it doesn't have more details on it, but I think if I check other news sources, I'm going to read out what that HCOB means. But I can see service PMI, producer PMI, and manufacturing PMI for these different. This is Germany, this is for Eurozone, and then this is GBP, S&P Global CIPS Service PMI. This is also for by 9:30. So let's see, we have a lot of high impact news by 7 o'clock down to 9:30 a.m. Then in the afternoon, on that same day, we have by 2:45 for the S&P Global Manufacturing PMI for the United States dollar. So let's watch out, guys. On Wednesday, we'll be trading live because we have high impact news on Wednesday by 1:30. So you guys can jump on board. We're going to trade live on Wednesday, probably the United States against the Canadian dollar. We're also going to be checking out different Canadian dollar pairs. And if you see anyone that the Canadian dollar can be on a very good spot to take a buy or a sell, we're going to place that trade together on Wednesday. So go down on the link or the description below, get the link, get the link to join our Telegram channel. We'll be having this on Telegram channel, and probably if it's not too conducive, we would have to push it to Instagram. So please, guys, thank you for watching to the end. Share this content, like this content, comment on the comment section below about what you see interesting or what interests you about this information. We're just here to give you guys guidance on how we trade and what we see in the market before we place our trades. So just join us, learn this education, and we wish you guys a profitable trading week.